Hello everyone. In this video, we're going to be discussing how to pay yourself from your company. This is a question that we get asked quite a lot. So we thought we'll put this video together to address the various methods and some of the things we need to keep in mind. Let's get straight into it. One of the ways to pay yourself from your company is by taking out a loan. When you take out a loan, you need to deal with Division 7A. Division 7A was put in place because people were taking out a loan from the company, which is really a share of the profit from the company, but they weren't being taxed on it. And they did that through a loan. So Division 7A ensures that if you do take out a loan, then you need to do it in a Division 7A compliant manner. If you don't, then the loan can be deemed a dividend. And when it's deemed to be a dividend, you don't get the benefit of any franking credits that could have been attached to that. We'll discuss franking credits and how important they are, benefits, in another video. Another way to get paid out of the company is by acting as a contractor. So the company engages you for services. You issue an invoice to the company and it pays that invoice. Now, potentially what you might be doing here is kicking the tire down the road in terms of the tax you need to pay. Because instead of having salaries and wages and paying pay-as-you-go withholding throughout the period, you're effectively shifting a profit from the company to yourself, and you will be taxed on that at the end of the year. So you might have a large liability you need to deal with at the end of the year, instead of having PAYG withholding being paid to the ATO on your behalf throughout the period. Another consideration is whether you're in fact a contractor or an employee. Some of the things we got to keep in mind to determine whether you're an employee or a contractor is things like, are you required to complete a certain number of hours? Can you subcontract your work out? Can you have other people do that? Do you have the flexibility to complete the work whatever time you want? Are you being paid on an hourly rate or are you being paid for a result? Well, we can do another video on that one, discussing the differences between a contractor and employee, those considerations. You can also pay yourself salaries and wages, and that's what we touched upon before. So with salaries and wages, you're on the payroll, you're being paid, whether it's weekly, fortnightly, monthly, you're being paid on a regular basis, and you're being also paid superannuation. Pay-as-you-go withholding tax is being withheld on your behalf and provided to the ATO, the tax authorities. The other thing being on the payroll will do is it will increase potentially the work cover insurance that needs to be paid, because it's calculated on payroll, and there's other various factors that come into play, such as industry risk, so on and so forth. So again, another one is salaries and wages. You can pay yourself dividends out of your company. The dividends are a share of the profit that's being provided to you or distributed to you. Now, dividends can be either unfranked, partially franked, or fully franked. When we talk about partially, fully franked, we're talking about the percentage of the franking credit that goes into them. For example, there can be 50% franked, which means that half of the profit does not have franking credits. The other half does have franking credits. Franking credits is a tax benefit you receive being tax already paid on the profits generated by the business. And so it comes through with the dividends that you are paid. Very, very beneficial. Another way to pay yourself is through expense reimbursement. So if you have an invoice you need to pay, you can pay that out of the company. One thing we need to be cognizant of here is if the expense is personal, private in nature and not deductible, then that will need to be passed through your loan account. Where the expense is a business expense incurred in generating assessable income, taxable income, then you can pay it out of the company and get a deduction. We don't always like to go down that path because it can get very messy very, very quickly where there's a lot of private transactions. However, if it is generally deductible and incurred in generating assessable income, then no worries, you can use that method. So we've discussed all these methods. Which one's the best to go with? Ultimately, the answer is going to be a mix of these. As an example, you can have salaries and wages. You can pay yourself some dividends. You can also use expense reimbursement where those expenses are genuine business-related expenses and they're deductible. You can also take out a loan, but that loan needs to be compliant with Division 7A, which again, we will have another topic, another video about that. Now, here's the catch. All this means absolutely nothing if we are dealing with PSI. PSI means income that you earn for your labor or your services. When this happens, all this can't be used, and the income that you generate in the organization must be pulled out of that organization and put into your personal tax return. So it's very, very important from the get-go to distinguish whether or not you're earning personal services income. Here's the thing. If you're earning personal services income, speak to your accountant about it, and together you can find a way, come up with a plan to manage personal services income and ensure that in the future you are not earning personal services income and yet you can still continue to grow your business. As always, thank you for watching this video. We hope it was very helpful to you. Please like, subscribe to the channel, and put in comments down the bottom or wherever is applicable, letting us know what your thoughts are, what you'd like us to discuss, and anything else you think we could be doing better to better serve you. Thank you very much. Please remember, this is general advice only. It's not tax, legal, or financial advice. You should be speaking with a professional who will guide you through the steps, keeping in mind your unique objectives, your situation and circumstances. Or you can reach out to me and we can discuss further.